Financial Survival Network, helping you to survive and thrive in the new economy. Get our complimentary newsletter at financialsurvivalnetwork.com. This is the Financial Survival Network.
A lot of us are into gold, into precious metals. Some of us are so into it that we actually go into the business, and some of us are visionaries and get into it before everyone else. My next guest is David Schectman, founder of milesfranklin.com. He's been in this business probably more years than we can remember, and he's going to talk to us about his story. Hey, David, welcome to financialsurvivalnetwork.com.
Hi, Kerry. I'm glad you had me on the show today. We can talk about some fun things.
Absolutely, and your story is kind of interesting because you kind of just found this business. Tell us how you got into it.
Out of desperation. I didn't have the insight. I worked for a company in upstate New York called Champion Products, and for 10 years I was selling athletic uniforms to the colleges and pro teams. I had sold many things over the years. I had been a buyer for Target for 3 years. I'd done a lot of things, none of them financial. And in 1983, my wife and I both lost our jobs at the same time, and that was a very difficult economy, much like what we have now. It took all of our funds to survive, and after nearly a year, we were right on the verge of bankruptcy, and I was given an opportunity to work for a gold and silver company in Minneapolis selling rare coins, and that would be about the last thing on my list of something that I ever would have considered doing, but it was the only job available. And I took the job and started to look into what gold and silver were all about. In those days, Kerry, the way precious metals were sold, very few people were selling bullion. Most people were selling numismatic coins. Gold and silver coins were sold for profit. That was the only reason that was offered to buy them. And I said to myself, when I started the job, how would I respond to somebody who called me on the phone and said, David, would you like to buy an investment in gold and silver coins? And it just didn't work. So I decided that there had to be a better way to present the product. And I decided that the way to do it was through education. And somehow, and when I tell you, believe me when I tell you, I was the first person in this industry to use education as a marketing tool for precious metals, because I felt people had to know why they need it. And the why went way beyond profit. Within 2 years, I was the in-house economist and public spokesman for, at the time, the largest precious metals company in America. And I traveled all over the world speaking on their behalf, Hong Kong and Singapore and Zurich, Cayman Islands, wherever there was a financial conference, I was a featured speaker. Discussing the economic reasons why gold and silver made sense, and then profit was rarely ever discussed. By 1988, a good friend of mine, Dr. John L. King, who was an economics teacher from UCLA, and he wrote a very successful deflationary newsletter called Future Economic Trends, he was endorsing me personally and the company I worked for precious metals, but he was a deflationist, and back in those days, he and Vern Myers were the only two people who spoke that tune. Everybody else was an inflationist. He died suddenly, and there was no one left to write his newsletter, and told the owner of the company I worked for, I can do this, and he didn't think so, but I did, and I started writing Future Economic Trends, which went out to 10,000 people, and wrote it for a year. And by 1990, end of 1989, beginning of 1990, I left that firm and I formed Miles Franklin. My middle name is Miles, and my partner's name at the time was Franklin, and that became the name of our company. And we started the business not as a gold firm, but as a Swiss annuities company. And we hooked up with a company called BFI in Zurich, Switzerland. Fabulous people, ethical, great products, just the greatest people to work for. And we moved a few $100 million into Swiss annuities until the Commerce Department here in Minnesota said, you can't do that. These aren't registered companies. There was nothing scamming about the product. It's just that they weren't registered. So we then switched into gold, but by that time we had a very large following. people were reading my newsletter, and they liked the product that we sold. They liked the way we serviced them, and that launched Miles Franklin as a bullion company by the late 1990s, which was a time that nobody was buying gold and silver, and everybody was into the stock market. So by 2001, right around the time that the market crashed, and I had written about that and warned about that 6 months to a year in advance, our business started to turn, and we grew from a small company to a very large company. And today, our business probably ranks in the top 10 companies in the industry, but we only have 8 brokers. And we try and keep it small and try and be very personal with the people who we deal with. We have earned a fabulous reputation, and it's not by accident, because Kerry, when I went into this business, it wasn't to get rich. It wasn't to see how important and well-known I could become. I just felt that this was a product line that could benefit people, myself as well as others. And I've never asked anyone who we work with to do anything that I wasn't willing to do myself.
And let me ask you,
I think that's...
Yeah. So getting into the business, and I appreciate that, having been in business my whole life myself. Do you think things are different now than they were when you got into business?
Oh, in many ways. First of all, what's changed, first of all, is the information age. When I was working for this other firm, I used to write a quarterly newsletter. That was enough. There was no computer. There was no internet. I mean, there was a computer, but very few people, including me, used it then. And a quarterly was enough. In the 90s, I upped it to a monthly. 10 years ago, it became a weekly. And now, between Andy Hoffman and myself, we write 2 long dailies. So there is a tremendous change in the speed of information. Now, there's good and bad that goes with this. I think the negative to all of this information is it forces people to focus on the wrong things. When you look at the gold and silver market, the day-to-day business, the day-to-day movements, the day-to-day news stories are noise. You really have to, or you really ought to sit back, and my writing will take you in this direction, and see the big picture and the primary trend. It doesn't make any difference what gold does today, tomorrow, or next Tuesday. You really have to ask yourself, where is it going to be in 2015? The problem is, this is an industry, Kerry, where most of the people in it are in the business to make a living. They have to sell something, and they have to sell it frequently, every day, every week. Being conceptual and forcing people to look ahead is not the best thing for business. And what has happened is that the average person who listens to your radio show or who reads my newsletter or eventually becomes a client, they are not investors, but they're being fed information as if they were investors. Most people in this industry, Kerry, are not traders, and they shouldn't be. You don't buy and sell and short and futures and options. Leave that for the few percent of the people who are qualified to function in that realm. And it's not most of the people who we deal with. So the disservice by all of this information is people are always thinking short term. If I wait, will it go down $10? Is this too soon? Is it too late? Is it too high? Is it too low? Where is it going tomorrow? That's not the way that you should look at this business, because in the end, gold is not an investment. Gold is money. It's the winnings you have in Las Vegas that you take off the table. You've made the money, you won, set it aside in gold, and don't worry about it. I have an interesting little story for you here. Matter of fact, it's in my newsletter today. I used to be, when I was young, in my mid-20s, one of the premier collectors of German Lugers. I had a collection that was, by today's standards, worth a couple $1 million, and didn't know what I had. Eventually sold it off way too early, way too cheap. But through all of this collecting, I remember what I used to pay for things, and this would be 65 to 1970. And I received a catalog recently. I hadn't followed this industry for a long time. It's called The Most Anticipated Auction in Our History by Rock Island Auction Company. And they're doing an auction September 7th through the 9th of some of the most amazing guns ever offered for sale in this country, Winchesters and Colts and Revolutionary War and Civil War stuff, and lots of Lugers and Walthers and Mausers. So I took a look at the section I knew, the section on Lugers, and there were things in there that I would have loved to repurchase and could afford to buy right now. And I took a look at them, and I was absolutely stunned at the pricing. Guns that I had paid $100 or $125 for were selling for $4,000. Guns that I paid $1,000 or $1,200 for were selling for $30,000 to $40,000. The average rate of increase was 30 to 40 times since the mid-'60s. Wow. And I said to myself, how can this be possible? Until I kicked myself and reminded myself, David, you don't think in terms of dollars. Price it in ounces of gold and take a look and see what really has happened here. And when I priced these guns in gold ounces, what I would have paid in gold at $35 an ounce in the mid-'60s and what gold is selling for today, the guns were dirt cheap. Gold had increased 48.5 times. The guns had gone up 20 or 30 or 40 times. So they were actually a bargain. They cost less today in terms of gold than they did in 1965, which tells you what a strong asset gold can be over a period of time. And that's the important thing. Gold is not something you buy and sell for a profit in a short period of time. Excuse me. You put it away for a decade or two, take it out, and you can be certain that the buying power of that yellow metal will be at least as great, if not greater, than when you put it away. And that, to me, is an extremely important thing, the main thing people should understand when they buy gold.
Absolutely, and you see that with silver as well. You always get that instance of a gallon of gasoline in 1970 was 20 cents before the first Arab oil embargo, and here we are now. You take those 2 silver dimes and you wind up getting more than a gallon of gasoline, which is pretty remarkable when you think about it.
Let's go back to that time frame for a while. Back in the 70s, I knew absolutely nothing about gold and silver. If it wasn't on the sports page, I wasn't interested. And I had a friend who was an engineer who worked for Medtronic, and he came over one day and said he'd bought a couple 100-ounce bars of silver. And I looked at him and I said, why would anybody own a few 100 ounces of silver? It didn't make any sense to me. He also told me that someday every house would have a computer in it. And I thought that was pretty ridiculous, too. This was in the late 70s. He was a very, very insightful man. By the time that silver peaked early in 1980, the price of silver hit momentarily $50 an ounce. And there was a local gas station about 6 blocks from my home in Minneapolis here that was offering a gallon of gas for a silver dime. So we've actually gone through a period in the late 70s, early 80s, when silver was priced a little bit higher than it is now, where merchants would accept silver coin for their goods and services. I've seen it before. You will see it again. And people who buy gold, if you look down the road and look at the big picture, silver serves a different purpose in your portfolio. I think your portfolio should be at least 50% gold and precious metals, if not more, but you really need silver, and silver probably will outperform gold. That's not a guarantee. It's just a feeling that I have.
It's historical, too.
From that point of view. Historically, 57, 58 to 1 price gold to silver ratio is out of whack. It should end up 15 to 30 to 1 at some point. But the thing about silver is, if you buy a bag of junk silver, and a bag of junk silver, for those of your listeners who don't know what I'm referring to, it's a $1,000 face value bag of pre-1965 90% silver coins, either dimes, quarters, or half dollars. No matter how you mix it up, if you have $1,000 in that bag, it melts down to 715 ounces of silver. And in a situation, if we ever have a currency crisis, if we ever have a banking holiday, a collapse of the dollar, every one of those dimes in that bag will be worth, in buying power by today's standards, at least $10. And there's 10,000 dimes in that bag. So if you want something to protect you in case things really fall apart, it's not gold. Gold is too expensive. It's like an elephant sandwich. It doesn't do you any good. But a handful of silver dimes will get all the groceries and gas that you need. So I would urge people who are considering buying precious metals, and if you haven't, you really should, put away a bag of junk silver for every family member. And not only will you do well financially at today's prices on that investment, but it is as important to your survival position as putting away food and owning a firearm to protect it. I mean, there's certain things that a lot of us do hoping we never need to use them. And junk silver certainly is way up on that list. It's as important as putting away food and water.
Yeah, it's just like
it's
they
tradable.
say. Yeah, absolutely. For barter purposes, whatever. It's just like they say, money doesn't make any difference unless you don't have any. And, you know, when you need something and then you don't have it, it becomes very important. But if you don't need it and you don't have it, then you don't know. So you really need to be aware of that.
There's a couple other things I'd like to touch on that are conceptual, not the kind of things you probably go over with your guests too often. But from my point of view as the owner of a large precious metals firm, most people go through life with rose-colored glasses. They don't want to hear the truth unless the truth is something that gives them a good feeling after they hear the story. And really, the only way that you can honestly present precious metals is by looking at the bad things that are happening, not the good things. If everything were good, if we had balanced budgets and we had a sensible Federal Reserve and we weren't fighting wars, we really probably wouldn't need much gold and silver, if any. So when you talk about the reasons that you need to buy precious metals, you're by definition talking about things that others call doom and gloom and I call reality. When you look at things as they are, you don't have to always come out smiling. If what you see doesn't look good, then see it for what it is. And don't call it doom and gloom. Just say, hey, this is the way that things are. And if you're worried about the way things are, then ask yourself, well, what do I do to protect myself? Look, the world that we live in, Kerry, without getting too complicated on moving averages and these kind of trends and all the technical analysis that we're inundated with, and I read it every day myself too, the bottom line is Richard Russell hit this in the head probably 25 years ago when he said the Fed's purpose is to inflate or die. And that's where the economy sits right now today. If we don't inflate, quantitative easing is the term that we use these days. If we don't inflate, we go into depression. The Fed won't allow that, certainly not Bernanke, who was a student of the Depression, and that's his area of expertise. He would do anything to allow that from happening. And certainly the government won't allow, if they can help it, a depression, because they'll all lose their positions of power. So if the Fed and the government will do everything they can to fight a depression, the only tool that they have in their arsenal is inflation. They have to create more money, kick the can down the road, keep the game going a little bit longer, and in the process, over time, unquestionably, it hurts the value of the currency, which is why my $100 Lugers cost $4,000 today, 35 years later.
Yeah.
This is an ongoing process. It's accelerating right now. It's not complicated. Look where we are. Understand that, well, let's make it simple. Where would this economy be if interest rates were double-digit right now? Whatever is left of the real estate market and the stock market would totally be destroyed. We would be in a Great Depression. It would be simply awful. And the only way you can keep the interest rates from rising is to buy the bonds to hold down the interest rates. And that's what the Fed does. If they allowed the free market to price the bonds, we wouldn't have zero interest rates. So the Fed is printing and printing and printing, the sole purpose being politically to buy election for the incumbents and also to keep the economy from totally collapsing under the weight of $16 trillion worth of debt and a trillion plus a year being added onto that and compounding. Too late to fix it. Whoever is elected doesn't make a difference, not even Ron Paul. Nobody could fix this now, and I understand that. And that's why I don't get too excited about whether it's Romney or Obama unless you're talking about social issues. None of them can fix the problem economically. And once you understand that, then you have to ask yourself, what is the best course of action? And the best course of action, the only course of action that I see, is to be out of the currency that is being destroyed in the process of trying to support a failing economy. That's why precious metals become necessary. And yet not 5 in 100 in this country, maybe 2 or 3 in 100 own any.
Yep, no question about it. And it's not like I haven't been telling people. I've actually gotten some people to break down and do it, to buy gold and silver, because there's an inevitability to this process. When you read history, you see how fiat currencies have died repeatedly. Every one
of them.
Yeah, like I was at a conference and this guy, Jeff Christian of CRM, who's a Goldman guy, said the only financial system in the world that hasn't collapsed is the one we have right now. And
but the dollar's only worth about 3 or 4 cents of its buying power of 100 years ago. If you want to say that's not collapse, then what is?
Yeah, exactly. And the fact is, what I wanted to ask him is, the Byzantine system, based on gold, lasted 800 years until they started debasing. Does he think that the dollar system has another 800 years left in it? Because if it's got another 8 months or 8 years, I'd be surprised. But, trying to predict.
The handwriting is on the wall. The dollar system as we know it, the petrodollar, the world's reserve currency system, created right after the Bretton Woods Conference, 1944-45. We were given a great responsibility and a great gift, and the rest of the world simply hoped that we would treat it responsibly. And what that meant was keep our money creation in order and tied, relatively speaking, to a certain amount of gold as a reserve. Well, that all changed on August 15th, 1971, when Nixon took us off the gold standard, and from that day, there wasn't a currency in the world backed by or redeemable in gold. And the whole monetary system of the world has been unraveling since 1971, and it's coming to a crescendo. You can see it in Europe with the euro. You can see it here. It's happening all around us. And many of our major trading partners, including China and India and Russia, Venezuela, Middle Eastern countries, they are trading outside of the dollar with each other, either with commodities, or with gold, or with their own currencies, and bypassing the dollar. Now, once the dollar is totally kicked off center stage as the reserve currency, whoever is listening to this, remember what I'm saying to you. If you don't have a lot of gold and silver, it's over for you, unless you don't mind spending $10 or $15 a gallon for gasoline and everything proportionately up along with it. The days of us living on the strength of a currency that we can print out of thin air and buy other countries' goods and services with counterfeit money is rapidly coming to an end. I don't think the dollar can last the rest of this decade at the maximum, and it will be replaced by something or some combination of things, and I fully expect at least a part of the backing of that new monetary unit will be gold. It has to. If you don't tie your currency to a standard, a rock, where you can only have 10 units of currency to one rock or 1 ounce of gold, that's gone now. So the Federal Reserve can hit a button on a computer and create $1 trillion out of thin air, and that's just as easy as it is. If it were the gold standard, they would have needed billions of ounces of gold or millions of ounces of gold behind it as a backing, which would limit their ability to create the money. So the whole system is flawed. It's failing. And the central banks, it's in their only interest, their best interest, in making sure that the common people on the street haven't figured out how the game is played. So they sell and they lease out their gold, which is really their citizens' gold, in order to hold down the prices in the marketplace. Andy Hoffman, who you have on your show often, talks about this continuously, and he's absolutely right. The markets are completely rigged.
Yeah.
And some people then say, well, then why would I even want to own something in a rigged market? But I would say, well, hey, gold went from $252 to $1,700 in spite of the rigging, and it's just getting started. So all they can do is slow down the movement. They can't stop the trend. That's why I look at the big picture and the primary trends. They're too big and powerful to be stopped. You can control them for a minute, a day, a week, a month. In the case of gold, the last 9 months, 10 months. But that's it. You can't really derail it. And once gold tops a little over 1,700, it's off to the races. Could happen very, very quickly.
Oh, we're a hair's breadth away from 1,700. So you've been in this a lot of years already, David. And
almost 3 decades.
Almost 3 decades.
You know what? And
remarkably.
nothing I've seen has altered my views, those that I saw in the beginning. It's taken a little longer to play out, but that's a good thing. It gives all of us more time to accumulate. And please, don't tell yourself it's too expensive. I missed it. If I wait, it's getting cheaper. You will lose if you play that game. The name of the game is when you have extra dollars, put them into gold, and whatever you pay, it will be so cheap 3 or 4 years from now, looking back, that you'd ask yourself, why was I waiting? Why didn't I do more than I did?
Yeah.
This isn't a sales pitch. This is just the way that it is. I have about 95% of my family's net worth in precious metals, physicals. Mm-hmm. And I don't want dollars. I have enough dollars to cover my living expenses and an unexpected emergency, and keep it at that level. And everything else that I own, irrespective of the price of gold or silver, it's still more valuable than my dollars no matter what it's priced at. And for a while, that will be the case.
Yep. I only wish that the things like some writers talk about, that there's this good guys going after the bad guys. I only wish it were true. I think the people who are buying gold and silver now are the good guys, and hopefully they'll be able to, in a position to help others if and when this collapse ultimately comes to pass.
The trouble, Kerry, is, and I'm sure it's as true with your listeners as it is with my readers, we're preaching to the choir. The people who follow us, they already get it, or they wouldn't be reading us and listening to us. The hard thing is to reach people who are outside of that group. They are really difficult. They're the people who say we're nuts, the mainstream media doesn't agree with you, you're doom and gloomers. No matter how much you can...
Preppers.
the facts that you give them and the proof, and there's so much proof it's undeniable, they don't care. We're wrong, they're right. And unfortunately for them, and that's going to be a majority of the people in this country, they will only find out too late, when not only will it be too expensive, but nobody is going to be selling it for paper dollars. You won't get it. That happened as recently as early 2009, late 2008. When the prices got low, when the market crashed, silver was $9 on the COMEX. You couldn't buy it for $20 cash.
I know.
No one was selling it.
Yep.
So by the time those of you who don't have it figure, yeah, these guys were right. They were onto it. I'm going to buy some. Who's going to be selling it to them?
Nobody.
Nobody will want the dollars. Everyone's going to be dumping dollars. So,
and then once that happens, the dollar will have no value.
Value.
David, so we find you on milesfranklin.com. You publish a daily newsletter.
Actually, we do two. I do one in the morning, and Andy does one in the afternoon.
Exactly.
Check them both out. And if you haven't got time, pick the one that you like. They're both very different.
Okay.
And they're both, I say humbly, very good. And they don't cost anything. I don't think there's a better source of information, paid for or free in the industry, available, period, than what we offer every day. You read what we have to say, you'll know exactly what's going on. It'll save you a whole lot of time because we spend the time in reading everything out there that's worthwhile and condensing it for you so you can do it in a short period of time, what takes us all day, each of us, in order to put it together.
Absolutely, and it's must reading for me. David, we really appreciate you being on FinancialSurvivalNetwork.com to hear this interview, as well as the dozens I've done with good old ranting Andy Hoffman, also of Miles Franklin, as well as many other world financial luminaries. It's FinancialSurvivalNetwork.com. David, we will talk to you again soon, and I think you're right about that 1,700 mark. It is pivotal, just like the $30 mark in silver.
31, and we're over that too. Yeah, it's coming. So
Absolutely.
Next time we talk, we'll look back how cheap gold and silver were last time we had an interview.
I remember when.
I remember when. Thanks,
All right.
Terry. It was a pleasure.
Likewise.
I enjoyed talking with you.
All right. We'll talk again soon.
Bye-bye.
Bye.